for today's video, I'm going to be sharing with you guys how to get $100,000 in credit funding within 90 days. So for those who just recently joined the channel or, joined several weeks ago or several months ago, we've documented pretty well, just some of the institutions that we've gotten funded with, and getting these firsthand data points is AOD FCU 20,000, Navy Federal 25,000, Navy Federal 15,000. We got Alliant Credit Union 10,000. We got NIH FCU, SECU 25,000. We have Rural King Harvest 10,000. So, and on and on and on, right? But basically what I wanted to do was actually share with you firsthand data points on how I was actually able to get a substantial amount of credit funding in a short window of time. The good thing about firsthand data points is that you kind of learn from your mistakes. I've been a guinea pig in a sense, kind of figuring out all the little nuances of different financial institutions and then developing strategies. You can then apply some of these same strategies and get even better results because, as I mentioned, more data points will better inform you. So in terms of getting credit funding in a short period of time, in 90 days rather, the strategy really works best with credit unions. And I'm really biased towards credit unions just because they're much more generous than large banks. So one of the most important things in terms of prerequisites is establishing that banking relationship. So you're going to want to set up either a checking or savings account or both. You could go the extra mile and get insurance or merchant services if you have a business and so forth. The more accounts you open is going to increase your internal banking metrics in terms of your relationship banking status. So the more accounts you have, the more embedded you are within institutions, the more likely that institution is going to extend funding to you. Because when you think about it, it's like just being more invested, right? When you have more skin in the game, then they're going to be more open to doing business with you because you're a serious customer, versus if you just join today and then try to apply for $20,000. Not to say that you can't get that, but it's going to be a lot lower chances because you haven't established that banking relationship. Now, the minimum window that I use, the rule of thumb, is 90 days. And that's with a lot of institutions, kind of like a probationary period. They want to see what type of customer you're going to be before they really start to open up everything to you. So in that 90-day period, you're really trying to exhibit banking habits that are going to put you in a more favorable disposition. A couple things that you can do are doing deposits month over month, and meaning that from month to month you're going to want to retain more money in that account, checking account, savings account. But you don't necessarily need a whole lot of money to do that. You can do smaller deposits. Obviously the bigger deposits the better, but banks really like to see deposits going in. And you've seen a lot of that even with a lot of these new fintechs where they're looking at your banking data. It's the same thing with financial institutions, but they don't necessarily advertise that as much. Anyways, that 90-day window, you're going to want to refrain from opening any unsecured credit accounts and just really, have deposits going in there. And after the 90 days, then, apply for something. Number two, right? No recent new accounts within the last 6 months. That's really important. I talk about this in terms of credit gardening. When you're doing gardening, you're not applying for any new accounts, because when you have a lot of new accounts in a short window, that's looked at as credit seeking. If you just opened up a whole bunch of new accounts, you're not going to be able to get funding as easily, if you would have gardened and refrained from opening accounts within a 6-month window. So you're going to want to at least make sure that your youngest account is a minimum of 6 months to put yourself in the best chances of approval with financial institutions. Number three, and this is probably the most important aspect, no derogatory accounts, right? I can't stress this enough. Having derogatories on your account is the difference between getting approved or not. That's the difference between being bucketed as prime versus subprime. Now, if you have derogatories, you shouldn't be applying for credit because it's just going to put you in that high risk bucket and lower the chances of you actually getting approved. So applying with collections, late payments is really counterproductive when it comes to funding. If you need assistance with getting derogatory items removed from your credit report, you can check out Crown Credit Pro. There's a link in the description. One of the best in the business. They do collections, late payments, inquiries, bankruptcies, child support. So definitely go check out Crown Credit Pro. They do an amazing job. But yeah, the derogatory items is the most important aspect of getting credit funding. Number four, right? And this is more so of a strategy. The strategy that I've utilized with credit unions are simultaneous applications as well as double dipping. Now, let's start off first with simultaneous applications. So that basically means that you're applying for, let's say, two different institutions that pull from the same bureau at the same time. So let's say, for example, this is a quick example. Let's say NIH FCU and DCU, they both pull Equifax. So when you're doing a simultaneous application, you're going to want to have these two applications lined up at the same time, and you're going to enter in the information, and then basically hit the submit button right at the same time. The reason why you want to do that is because it takes about 10 seconds or less for that inquiry to post to your credit report after you apply. So what's happening is when you hit that submit button, that particular financial institution is querying, let's say in this example, the Equifax database, and they're pulling your credit report. So if both of these institutions are pulling at the same time, what you want is for them to pull the exact same report. So when you do it within that short window, you're not giving it enough time for that inquiry to post, right? Because what you don't want to happen, let's say if you applied a minute apart, let's say you apply for NIH FCU, and then a minute later you apply it for SCCU. By the time SCCU pulls your report, they're going to see that inquiry from a minute ago or 30 seconds ago. So you want to time it so that they're querying the same time and they're pulling the identical report, because this will make sure that you have the same probability, or not necessarily the same probability because they have different underwriting, but you want both institutions pulling the same exact report. You don't want SCCU to see the inquiry from NIH. So that's just an example. That's why you want to do the simultaneous applications. And you don't want to do more than two. If you do three, it's not going to work, because by the time the third application pulls your credit report, it's going to see the inquiry from the first. So this strategy really only works with two applications at a time that pull the same bureau, right? So as long as they're pulling the same bureau, you're fine. So you could essentially do this with Equifax, TransUnion, and Experian. So that's the thing with the simultaneous applications. Then on top of that, with credit unions, with certain credit unions, let me just preface that, you could do what's called double dipping, meaning that the inquiry, right? So when they do a hard pull, let's say you apply for a credit card, and I'll share this example. Let's say SECU, for example, you apply for a credit card, their Visa signature, they pull your credit. So at SECU, the inquiries are good for, I believe, between 30 or 60 days, right? Or I know at least the pre-approvals are good for 60 days. The inquiries might only be good for 30 days. But within that 30-day period, if you apply for a subsequent account, they're not going to hard pull you again. They're going to use that same hard pull that they had used earlier. So let's say, today you apply for a Visa signature, next week you apply for a line of credit, it's going to be the same report. So they're not necessarily going to know what you've applied for, since then, because it's using the same exact data, right? The same exact report to approve you for. Now, and the great thing about the double dipping versus, if you go to like a major bank, is that the major banks, they're going to hard pull you every time you apply. Sometimes even if you apply within the same day, they may even hard pull you twice. So the great things with credit unions that you can double dip, get two or even in some cases three accounts using the same hard pull. So and that way, you're really utilizing those inquiries to the best ability. So that's how I was able to get a line of credit and a credit card from one particular institution. But imagine you do that for 5 different credit unions. So that's 10 accounts potentially. And assuming that you get 10,000 for each account, which is not that difficult, that's $100,000 right there. So that's kind of the strategy that you would use, and in terms of getting credit or funding, and being as efficient with the credit funding as possible. And the last thing that you're going to need for this strategy is patience, right? So making sure that your profile is set up right, no derogatories, very low inquiries, and making sure that you're already positioned and set up with some of these institutions already before you apply for credit. So, you've already been in the system for 90 days. You've done a little bit of, banking activity, maybe some deposits, and you just have everything lined up. So you're already a member with all these institutions at first. And then what you're going to do is, like I mentioned, you could do the simultaneous applications. Let's say you pick 2 credit unions to pull Equifax, you pick 2 that pull Experian, and maybe 1 that pulls TransUnion because there's not as many, right? So that's 5 credit unions and then you can double dip. And I'm going to give you an example of a couple that you can double dip on, right? SECU, you can double dip, they pull Equifax. DCU, you can double dip. NIH, FCU, you can double dip. So those are 3 institutions that pull from Equifax. Then from TransUnion, you can do Alliant. They pull TransUnion, and you can double dip on them as well. And then let's say, for example, Andrews FCU, there's First Tech, right? So you can double dip with these institutions, and it's very, very efficient. So I just wanted to share this strategy with you in terms of getting access to high limit credit funding in a 90-day period. And if you have any derogatory items, hit up Crown Credit Pro. Anyways, that's all I wanted to share with this video. Until next time, y'all take it easy, and we'll talk to you soon. Peace.